Oh man, so this macroeconomic reading just ruined everything for crypto. Bitcoin down 3%, Phantom down 6.5%, and the next 48 to 72 hours are going to be critical for crypto. I'm going to show you the key levels in the charts, because if we breach this particular level, things could get pretty nasty. So make sure you hit up the like button. Don't forget to subscribe. As always, get your account set up ready for the next big trades on BYBIT, links in description, who are offering you up to $1,050 in bonuses. You've also got PRIMEXBT, who are offering you guys up to $7,000 in bonuses. You just need to deposit and you get your bonus, which you can trade with. So get yourself set up, guys, because I've got my trading accounts ready. We just had a course member live stream where we were discussing some of these key levels, and I thought I'd bring this to you. We went through how to set up your basic trades, how to set up your accounts, what stop losses are, how to do limit orders, how to do stop losses. If you guys are interested in all that, ijaz.uk/member to join those course member live streams. We've also got a contest where you can win access to membership. All you have to do is sign up to BYBIT and PRIMEXBT. We'll be doing a raffle, and a winner will get 6 months free subscription. Yes, 6 months free subscription to our course member live streams. Right, Bitcoin sitting here in this channel, and you can see the market just kind of dumped a little bit today, down 3% here. Not fun. You can see we wicked to a low of 29,200-ish. We're currently sitting at 29.5, but things are getting a little bit worrying now. The reason is we've just gone lower than this low here, right? We've poked down lower now, and now this looks like a little bit of a downtrend, suggesting we could be coming down to the bottom of this channel at 28,600. Now, more about that in a little bit, because first we need to understand what happened with the job readings, because this is the critical number. We were just discussing this on our course member live streams. The jobs non-farm payroll figure came in at 390,000 jobs versus an expectation of 325. Wow, that means you got more jobs than expected. So why is the market unhappy? Well, a few things. That market's not only unhappy because of this, there's also the issue with Tesla CEO Elon Musk announcing he's going to cut 10% of Tesla jobs because he's expecting a more painful period ahead than we initially thought. Remember, yesterday we had Jamie Dimon, the JP Morgan CEO, come out and said there's a hurricane ahead and nobody is prepared. We also had the Fed official Brainard come out and say she doesn't see any chance we're going to have a pause in interest rate hikes. So a lot of negative news coming out towards the end of this week, throwing us into the red at this week. But why is this a bad thing, right? What's going on? Well, the issue with the jobs figures is we are in a catch-22 situation. We are damned if we do, damned if we don't. I spoke about this earlier today before the figure came out, and exactly what we thought has happened. So when the figure comes out, the expectation is 325,000. Producing more jobs means the economy is not slowing down, which means there could still be inflation, and therefore that could give Jerome Powell more of a reason to be aggressive with his interest rate hike. So we don't want the jobs figure too high. It means the economy is still overheating. But if the figure comes in too low, if the figure had come in at 250, 275, then the markets would have been upset as well, because the markets would have said, we're slowing down too fast. You're going to drive us into a recession, right? So you're damned if you do, damned if you don't. Double-edged sword, and we were never going to win. This is why it's such a tricky market to be in right now for crypto, because everything is just excuse to move to the downside. There's no reason to rally, no reason to be happy, and that's how things are. Now, I did spot a positive. The positive was this: average hourly earnings were also unchanged at 0.3% month on month versus an expectation of 0.4. When you times these by 12, you get an annual figure, right? So the expectation was 4.8. We came in at 3.6. That's a big improvement. 3.6% inflation there is within what the Fed would be comfortable with. So that's a good sign there that we can take from this, okay? Fine. So that's some of the things that the market is a little bit worried about. But what I want to show you are the key levels. And we know the key levels are this 28,600 mark. If we lose that level, guys, because remember, we're coming in to test that support again. We've tested it numerous times, and we're coming to test it again. Are we going to bounce, or are we going to break to the downside? If we break to the downside, I need to show you that the price target is not pretty. It heads to the bottom of this wedge all the way at 26,200. Now, I've been saying to the course members and you guys on these videos, we need to prepare for this level. I didn't buy any of these rallies to the upside, and this was probably the most convincing one, but we got thrown straight back inside. Okay, I'm still expecting a lower price point. Remember when I shared all those on-chain metrics? 24,000 was the number I had in my head, but the bottom of the wedge suggests 26,000. I'm preparing myself with cash on the sidelines in case we get an opportunity. If we do, my opinion is we won't last there for long, right? I think it'll be a quick flash and we won't be there for long. So you need to be ready to take advantage of that if you want to be dollar cost averaging in on Bitcoin and some of your favorite alts at the 26th level. So that's the level we could be looking at if we start breaking to the downside. Now, the positive situation and the situation which I would trade long, and you guys can join me on BYBIT, links in description. You can get yourself set up on BYBIT, deposit your amount, get yourself set up ready to trade with us, is if we do manage to bounce off this level again and we can see some confirmation candles, you could get a quick and easy trade all the way back to the top of the channel, okay? Now, I personally would run this up towards 31, take a profit just before then, and then look to see what happens on the next trade. As in, we can then say, okay, if we break out from this and get a retest, I'll take it again towards 36 and beyond, as well as a separate trade, okay? So I'd be splitting this up as two. I'd want to take this bit here, and then I'd want to get out with my profit and then see if there's a trade to take on the next leg up from a trading perspective. Okay, so that's a scenario to the upside that we'd be looking out for. Now, what does this mean for altcoins? Well, if you look at Phantom, we're actually breaking down now from our pattern on Phantom. If I head into the hourly, you'll see this wedge which we were forming. We're now breaking out from this pattern. Remember, the price points successively, if I look here on the hourly chart, you've got a bit of support at 33. You've got a little bit of support coming in here at 32. But the reality is if Bitcoin wants to head to 28,600, the blue line I was just showing you, I'm looking at a 30-cent Phantom here really. And then if we head towards the low point on Bitcoin, I'm expecting at least 24 on Phantom, and then even lower 15 if Bitcoin gets really, really disastrous. So those are the levels. I personally don't short, so I won't be shorting this to the downside, but it doesn't look great that we're breaking down from this pattern, particularly with Bitcoin continuing to bleed. So this weekend is going to be critical. If I come onto the weekly chart, I want to show you guys something particularly important. And what I want to show you is everybody's spoken about the fact that we've had record numbers of red candlesticks, right? So if I come here, tidy this up, there we go. We can see 1, 2, 3, 4, 5, 6, 7, 8, 9 candles in a row have closed, have closed red. But now look, this candle was doing so well. We wicked all the way up to 32,000. It looked like this one was finally going to be green. But the bears are strong again. We're now gone red. 2 days left before this candle closes. We'll watch this together on Sunday when this candle closes. Because if we close below the 29,000 mark, this does not look good for this 29,000 support level, which held in the summer of 2021, okay? So this is what I'm looking out for. It does not look good. Let's be honest, guys. Let's bring out the EMA ribbon, really extend it to the downside. Here in summer, we used the EMA ribbon, we rode off of it, and we kept moving towards the end of 2021. It doesn't look like we're doing the same right now in 2022. It's a really painful period with very little bullish action. Even the bullish action we started the week off with, you can see the bears have taken control again. And if the bears have a strong 48 hours and we close below 29,000, that does not look good for that support level. And then we're looking at the levels that I'm speaking of, 26,000, 24,000. I'm not going to talk about 20,000 yet. You can see it's there as a support level on my chart from the previous bull run, which we can date back to, but it may come into play if we keep making such negative progress to the downside. Now, does this really matter long term? The reality is, for me, no. Right? I have long-term conviction in my plays. I don't have any weak plays in my portfolio right now. I'm holding my holding bag. And that bag is with me. If Bitcoin goes to 20,000, I'm not scared about that bag. If they all retrace another 25, 30%, I'm not scared. I'm prepared to dollar cost average in. And it's time for you guys to look at your portfolio with the same mindset. Prepare yourself. Just play the scenario back in your head. If Bitcoin falls to 20,000, how do you feel about your portfolio? And if you don't feel comfortable, that leaves you a funny feeling in your stomach, it's time to do something, okay? So for your long-term portfolio, really important. You have no time for low market cap plays, no time for meme coins. It's time to get serious on high conviction plays. If they fall, if Bitcoin falls to 20,000, I know what I'm doing. You don't need to second guess what I'm doing, right? If the projects I'm holding drop to a certain level, I know what I'm doing. I'm not going to be panic selling. If you have coins in your portfolio which you're prone to panic selling, either sell them now or what's the point selling them later at 25% further drop, right? There's no point. Panic selling is what gets you in trouble. It turns that unrealized loss into a realized loss. There you have it, guys. That's what's happening in the market. Not a great way to end the Friday here. Really eclipsing all the gains on crypto, putting us back on another 10th possible red candlestick. Smash the like button and subscribe, guys. We do have some exciting trading opportunities coming up, so get your links set up. BYBIT, PRIMEXBT offering some great bonuses. Use my links in the description. Get yourself set up and have the exchanges ready. Remember, I keep my trading exchanges separate from my hodl exchanges. So the ones below are my trading exchanges. Get yourself set up, put a little bit of funds in there, small part of your portfolio, and practice how to trade, learn how to trade some of these trades with us, and learn how to trade the market, right? That's ultimately what we want to do. If you need more support around that, you can consider joining our course member live streams, ijaz.uk/member, where we can walk you through that together. Thanks for watching, guys. We'll see you in the next one.